All right, welcome everybody to Preparedness Tips from the Trenches. Does your insurance safety net have holes? My name is Emily Rogan, and I'm the Senior Program Officer for the nonprofit organization United Policyholders, and thank you so much for joining us today. So I always like to start the presentations off by telling you a little bit more about United Policyholders. We have a really insurance-y name. We are a nonprofit organization, and we do not take any money from insurance companies, and we don't sell insurance. Our mission is to be a voice and an information resource for insurance consumers. And what that means is that we have subject matter expertise in insurance, both in insurance claims, the buying process, and legal matters. So we're really fun at parties. We are supported, like I said, not from insurance companies, but instead from individual donors, donations from businesses, and grants from community foundations. That's where we get the large part of our grant funding from. We are a trusted source in the media and a respected voice for insurance consumers, both in courts, the legislature, and public policy forums through our advocacy program. And we've been doing this work for 30 years now, empowering people to prepare, rebuild, and recover from disasters. Our subject matter expertise is both in insurance and the long-term recovery process of how to recover from disasters, with that key focus on helping the insurance funds get flowing into both homeowners' hands and then into the community. We keep an eye on the insurance marketplace, and we stand up for consumer rights. Like I said, we are a nonprofit that works in all 50 states, but we've done quite a bit of work in Colorado. It was really fun pulling together these photos of some of the successes and work that we have done on the ground, which include work in all three of our programs. So both our Roadmap to Recovery program, which is our post-disaster program. We were in your county, in Boulder County, for the 2010 4 Mile Canyon fire. And then the couple of years that followed, there were quite a few, both fires and the big flood that happened, where we were consistently on the ground helping people navigate the insurance claim process. Through that work, we were also able to make a very positive change in that we got the Colorado Homeowners Insurance Reform Act of 2013 passed, which expanded some of the laws that benefit insurance consumers. And then now we're here with our Roadmap to Preparedness program, which is paying forward lessons learned and helping people figure out how to shop wisely and protect their assets when it comes to protecting their home. So this preparedness presentation is part of a UASI grant. So a big thank you to Boulder County and to the Denver Urban Area Security Initiative for providing funding for us to do this preparedness work. We really appreciate that. So our tips from the trenches come down to the fact that it's insurance money, not charitable or government aid, that is the #1 source of money that helps people rebuild and recover after a disaster. Oftentimes people assume that FEMA will be there after a disaster to help them. And while they will be on the ground, FEMA grants usually are a maximum of $35,000 for individual assistance, and it's based on your income level and a couple other factors. So it's not as easy as it might seem that FEMA is just going to come in and help you when you need it. There are many programs that they offer, but only a certain few fall under individual assistance. Another source of funding is an SBA, or Small Business Administration loan, that homeowners can apply for after disasters, but that takes time. And again, it's a loan, so it does need to be repaid. And then, as always, there are many charitable organizations that help after disasters, but their funding is typically for emergency needs and cover the very basics for really surviving the disaster, not rebuilding your home. So that's why we're focused on insurance. And our insurance messaging is to be prepared and not scared. And it really comes down to a few preparedness action steps that we've identified that will help you take a good look at your insurance and make sure that safety net that you are paying for and that you think you have will be there when you need it. So the first thing we're going to have you do, that action step, is to dust off your insurance policy. If you don't have your policy, which includes your declarations page and the fine print that follows it, contact your agent, get a copy of it. That'll help you do this insurance checkup that we're going to be going through today. Inventorying your assets is so important. Time and time again, we hear that the process of creating a inventory of everything that you lost is one of the most traumatic parts of recovering from a disaster. So any sort of inventory that you can have beforehand and store it off-site so you'll be able to access it in case something happens is very, very valuable. We recommend that you get a clue report and clean it up. That's a little bit a report on your claims history. We'll kind of go over that briefly. And then also taking steps to harden your home. Anything you can do that will make sure that your home is can stand up to a disaster if it happens. Anything you can do beforehand will be worth it. That's a big piece that we want to reiterate. So when you're looking at your insurance, the important thing to know is that the devils and the dollars are all in the details. And unfortunately, it's all fine print when it comes to insurance. So we want to make sure you have the right kind and right amount of insurance. So that's taking a look at your coverage limits and then what kind of insurance you have. There's homeowners insurance, there's flood insurance, there's earthquake insurance. Sometimes earthquake insurance can be an endorsement on your home, and sometimes you can add flood onto your home. Sometimes they're separate policies. You can buy them as separate policies for flood and earthquake. So you want to make sure you have the right kind of insurance and that the coverage limits you have meet your own needs. So how much you would need to rebuild your home. And then again, every policy has different language inside, and that language really matters. It's the fine print. It tells us how much coverage you have. It has endorsements that add coverage or change the language, and it also has exclusions that remove coverage. So having that fine print on top of the declarations page is a really important piece to doing an insurance checkup. And what's the problem? Why are we doing this? In our work, we find that when you're going through the insurance claim process, there are two types of problems that come up. There are coverage problems and there are claim problems. And claim problems are very difficult, like delays in payments or delays in communication. Basically, the money's not flowing. That's a claim problem. Then we see coverage problems, which are extremely difficult to solve on the back end. It means that you just simply do not have enough coverage. And those problems are so hard that, this is really the bulk of our preparedness program, is to help fix these problems before you need them. So making sure that you have enough insurance will make sure that you don't have a coverage problem if you have to file a claim. And the post-disaster problems that we see, again, under insurance, is that #1 problem that we see after almost every disaster. And that's the hardest one. And we have been seeing under insurance as a problem our entire 30 years as an organization. It was a problem in 1991 after the Oakland-Berkeley firestorm. And it was a problem, all the way up to the 4 Mile Canyon fire, and then the Black Forest fires and the High Park and Woodland Heights fires. So we started doing surveys of the survivors that we help, and we asked them about being underinsured. And all those results are available, including for the 4 Mile Canyon fire, at uphelp.org/survey results. But again, after Black Forest, about 46% of survivors reported that they were underinsured. And then again, 54% of High Park and Woodland Heights fire survivors were underinsured. After the 4 Mile Canyon fire, it was a little higher than that. We are continually seeing this problem, and what is very scary is the amount that people are underinsured by. It can reach 6 figures, and that's always a little too much to just go, I'll just write a check for the part that isn't covered. It's these enormous amounts, which we really wish that people were covered for the whole amount, and so they didn't have these surprises and have to make hard financial decisions when they thought they were covered. Okay, so we are going to tackle this underinsurance problem by first reviewing your declarations page. And a declarations page is the first page of your insurance policy, more or less. It will have your name on it. It will have your address, the square footage of your house. I will show you some examples. And it's separated, your coverage will be separated into buckets. So there's your dwelling coverage, which is your structure, your contents coverage, which is all of your belongings, your other structures, so things that are not attached, that are not the physical structure, so maybe a fencing or a any sort of barn or other building that is not part of your main structure. And then your ALE, additional living expenses or loss of use coverage. So those are the four main coverages. And then the main thing we're looking at is that dwelling coverage, because some of the other coverages are often a percentage of that limit. So getting that coverage A number is very important. And then again, not all policies are alike, even within the same insurance company. It's an important thing to keep in mind. Along with your declarations page, you'll see endorsements, schedules, riders, and exclusions. So they adjust the coverage limits. And then on your declarations page, you'll also see deductibles. So we'll see a couple examples of how they may look differently. So here's one sample. You'll see the 4 buckets. I think I can move my mouse around. Here's your dwelling coverage, other structures, personal property, and then that loss of use, which is also the additional living expense coverage. And then down here, we have the endorsements. So we have a limited home replacement cost endorsement of 150%. So that is also called the extended replacement cost coverage. And that bit, if it's a total loss that you have, it will increase your dwelling limit by 150%. So instead of 300,000, this person will get another 50%. So that number will go up to 450,000. We recommend buying extended replacement cost coverage. That's a really important endorsement. And it's a relatively cheap multiplier that you can add to your policy. So we do recommend that you buy as much of that coverage as you can. And then you can also see down here, we have our building code upgrade limit. That is another piece of coverage. So that's one policy. And let's see. This form shows your deductible up here. So you have a set. This policy has a $1,000 deductible, right? Right there. And then very clear as day, this policy does not provide earthquake insurance. This policy does not provide flood insurance. So that's an example of the exclusions that are right up top. So you're going to take your deck page and read it, see what you can find. Here's a second example of a deck page, and this one has a few different pieces that are important to see. So same buckets of coverage, right? Your dwelling, your other structures, your personal property, your coverage C, and then coverage D, loss of use. But for loss of use, it has something different here. It says up to 12 months and unlimited. So this is the amount that you would have if you could no longer live in your home because it was destroyed. The money you would have for your temporary housing while you're rebuilding your home. So if you lose your home, you still have to pay your mortgage, but your insurance through your loss of use or additional living expense coverage will cover temporary rent for temporary housing somewhere else. So this one has up to 12 months and unlimited. The first example had a dollar limit, $120,100. And there may be a limit in the fine print, so that's what you'd want to see. Sometimes it's 12 months, sometimes it's 24. Part of the Colorado Insurance Reform Act is that your insurance company has to offer you 24 months of this coverage. So if you don't have it, if your policy looks like this and it says up to 12 months, make sure you have an endorsement in there that bumps that up to 24 months. It's worth the cost. Rarely do we see people who've lost their home rebuild in 12 months when we're talking disasters and when a whole community has been hit. And then for this one, again, it may say 12 months, it may say 24, but whatever coverage time limit you have, it does not increase the amount you have. So you have to keep an eye on that coverage. Another example here is that that I wanted to point out in the second example of the deck page is where the deductible is. That's another piece that we said was different in every policy. So this policy actually has two deductibles. It has a wind and hail percentage deductible at 1%, and then it has an all other perils flat rate deductible of $1,000. So that's an important piece to know, that there is a higher deductible for wind and hail damage in this policy than there is for any other claim that you would file. So there's a little math that has to be done here. It's good that they put that down there, but it is a percentage, and percentage deductibles are something we're seeing more and more of, and we're not too happy with them because they can really increase the amount of what it decreases coverage because the deductible is higher. And you don't have to pay your deductible if you have a loss. Think of it as your settlement is the amount of your claim minus your deductible. Okay, so what matters? So for homeowners, we do have a question that came in. I want to address it for just 1 second as we go forward. It says, please define all other perils. So that would be something like a wildfire or anything besides wind and hail that is not otherwise excluded in your policy. So really, it means that there is a long list in the fine print of things that are covered and things that are not covered. So insurance used to be all perils. So that's basically you'd buy homeowners insurance and everything would be included. But unfortunately, now we're seeing insurance companies change the language and add exclusions, so different things are not covered. So sometimes you'll have a homeowners policy that does not include earthquake, does not include flood, has a different deductible for wind and hail. It will not include terrorism. It will not include, and that list keeps going. So that's why we ask you to get a copy of your deck page and a copy of the fine print, because there will be a pretty clear list of these perils are covered, long list, these perils are excluded, another long list. So just wanted to thank you for that question. It's a good question. And for those of you, that'll be a good segue into the Q&A box. It is on your Zoom control panel. That's how that question was asked. I encourage you to type in a question. If I don't get to it during the presentation, I will take a moment and answer them at the very end. So what matters? For homeowners, the most important thing is getting that dwelling coverage A limit right. And then on top of that, we encourage you to add extended replacement cost coverage. And again, that's a percentage. Think of it as a percentage multiplier. And then what that will do is it will increase your limits if you have a total loss. We want you to increase your law or building code upgrade coverage, because after disasters, that's one area where we often see that people do not have insurance. And then also increase your sewer and water backup coverage as well. If you can add an endorsement or increase your limits on that endorsement, we highly recommend that. And then also making sure you have replacement cost coverage over actual cash value. So replacement cost coverage is what it would cost to replace, for instance, your roof. Your actual cash value is replacement cost minus depreciation. So it minuses an amount for how much of it has been used. It's easier to explain that in terms of your personal property, which, for instance, a couch, if you have a couch that's 5 years old, it might cost you, say, $700 to replace your couch, but what you could sell it for Craigslist or at a garage sale would be significantly less than that, right? So that the amount you could sell it at a garage sale would be your actual cash value and your replacement cost of how much you'd purchase it to replace it. So replacement cost coverage is very important for homeowners, especially when we're talking about roofs. You don't want to see that fine print in your policy. But then for homeowners and renters, it's really important that you know what your deductibles are, that you know what your limits are for your additional living expense coverage, that you schedule your personal property, and I'll get into that quite in detail a little further in the presentation. And then also Know what your exclusions are. That's a really important thing to know, is what's covered and what's not, so you don't have any surprises. I'm going to go back for 1 second just to show renters one little bit. So if you have a renter's policy, if you are a renter, you will have personal property coverage and you will have loss of use coverage, and you will have this liability bit down here. But you will not have coverage for your dwelling or your other structures. That is how, that is the main difference between renter's insurance and homeowner's insurance. So when we're talking about renter's insurance, it's so important to make sure you have replacement cost coverage for your personal property, and you know what your loss of use coverage is. The example I gave for loss of use coverage a little earlier was for homeowners. If you if you can no longer live in your home while it's being repaired or rebuilt, you still have to pay your mortgage, but your insurance will cover your temporary rent because that's an additional expense. When we're talking about renter's insurance, the example there is if you can no longer live in your apartment while, say, if there's been a fire and they have to do repairs on the building and you can no longer live there, if you do not have to pay rent during that time, your insurance company will pay any additional expenses you have from having to live somewhere else. So it won't cover, but if you do still have to pay your rent, then it'll cover during that time, which usually you do not have to. It will cover any additional expenses. So it's not just a one-for-one. They pay for an apartment rental for a homeowner, they'll pay for an apartment rental for a renter. It's more of what additional expenses are you incurring because of your loss. Okay, so again, going back to homeowners, one of the most important things to keep in mind is getting that big number right. So that is your coverage A number. And just to make sure, to ease anybody's worries, we will be sharing the slides after this, and it is being recorded. So you'll be able to refer back to it. I hope that you guys aren't scribbling too many notes. It's a lot of information, but we hope that you're able to digest it and just take these action steps. This is a, think of it as, you know, just it's an insurance refresher. So you will be able to go back. So thank you so much for those questions. And again, I will also be referring back to publications that we have on our website that take all of this information and try and condense it into bite-sized publications. But as you can tell, you know, this is an hour webinar. I could probably talk about this stuff for 3 hours because we have so much experience on what matters. Getting back to the meat, so getting the big number right is so important for homeowners. It is, let's see, it is so important. So how much do you have per square foot to rebuild? That is the main thing to find out. So if you take your declarations page and you take how much coverage you have and divide it by your square footage, that's one way that you'll be able to find out how much coverage you have per square foot. And then you want to get a local contractor. You can call them up. I've heard it's around 300 about. That's one of the sweet spots of how much it costs per square foot to build after a disaster. So in your area. So you want to verify that number. Don't take it from me, take it from a local contractor who is on the ground building. That is the key. And so if they know what it costs to build, then you multiply that by your per square footage, and that's how much it will cost. You can get your insurance company to send out a replacement cost estimator. That is a professional who should go out and go to your house inside and out and give a number of what they think it will cost, that professional to come out. And the reason why the reason why it's important to have a person do it, because the home replacement cost estimating softwares that the insurance companies are using are often low. You think of an insurance agent, he's typing in your information when you're getting a quote, and that's about as far as his knowledge of your house goes. Your insurance agent is also potentially trying to get that price to a point where you will buy that insurance. Well, he or she will make that sale. And so you definitely want to trust but verify. So talk to a local contractor. Ask your insurance company to send out a replacement cost estimator. Somebody asked if your insurance company charges for a replacement cost estimator, and I'll tell you that they provide that service oftentimes free for high-end homes. It never hurts to ask. It's important for you to create a paper trail that you are asking your insurance agent to set your limits, right? You're asking them to use their expertise. You're not just going with what they're saying. You're doing your own homework on the side. You're working with them as a professional to make sure that your limits are enough, that you would have enough to rebuild if you lost your home in a disaster. So again, talk to a human being, take notes, do a little research. It's important because most of us really only know the amount we bought our house for. We know the amount that we could sell our house for. We know how much our mortgage is, but those are all real estate numbers. When we're talking about construction numbers, we're talking about how much would we need to rebuild our home. Okay, so you want to get that big number right, and then take a look. We're looking for two things in the fine print. We're looking at exclusions, which take out coverage, and then we'll be looking at endorsements that put in coverage. And they're very similar. So exclusions, sometimes it's a hard exclusion. So for instance, you will have, your policy may or may not cover earth movement. It will not cover the value of your land. It will not cover flood water, rising water. Oftentimes it'll cover damage from water that comes from above, but it won't cover water that rises, so flooding. Your home business, quite a few of us are working from home now. Your home business equipment, there's often an exclusion or a sublimit on that equipment that you have. But then there are these endorsements, and endorsements are key to adding coverage. There are over 100 possible endorsements that you can add, but the important ones that we know from our work are, again, extended replacement cost coverage. You can add coverage for your home business, replacement cost value on your personal property. That's an important one. Usually it's included, but it's an important one to ask about. Sewer backup coverage again, and that building code upgrade coverage. Those are some of the ones that are really important that we see a lot. Now, if you need a second opinion, if you after this webinar, you go to your insurance agent and you're asking them questions and it either doesn't seem like they're being helpful or you feel like you know more now from just an hour webinar, what I encourage you to do is get a second opinion. You want to have an insurance professional that is working for you. You are paying them, right? So you want to have confidence that they are covering your assets. If you need a second opinion, you can get, we have a match up insurance finder that's provided by Yapacopia, which is a benefit corp. So benefit corp is an organization that is for profit, but some of the profits go to back to charity. They give back with some of their profits. And you can get linked with an independent insurance broker. And that's the key. If you feel like you want a second opinion, find an independent insurance broker, because what they can do is they can shop many different insurance policies and find coverage that's right for you. And it's better to do this in, I'd say, peacetime. And peacetime to us means when there isn't an insurance crunch, which it sounds like in Colorado there's not right now. So it never hurts to shop around for insurance. The key there is you are shopping for coverage, not just price, right? So you want to make sure that you're still following all of the good advice about getting that coverage number right, knowing what your deductibles, making sure you're filling any holes with endorsements, all of the main themes that we're going over, you're carrying into shopping for if you feel like you need a second opinion. And really, it's a good time to mention that, you know, insurance is something that you buy 1 year at a time. So you buy coverage, your declarations page will have that that amount of time that you're covered for. So it's usually, you know, January 1st to December 31st, or, you know, whatever your policy is, but you're buying one policy at a time, 1 year at a time, and then the next year you're buying it again and again. You're buying the same thing relatively over and over again. So you can shop around. Going into coverage C, C is for content. It's so important to ensure your contents for replacement value, to be aware and beware of sublimits, because a lot of items have sublimits on them. And then consider scheduling anything valuable. And one example I like to use at this time is, think of what the most valuable thing to you is. And it may be a collection, it may be some watches or some jewelry, whatever it may be. That item typically has some sort of sublimit on it. So here are a couple examples that we pulled from one policy. So if you were to file a claim, you would only be paid out at these limits, no matter how much you had. But if you add an endorsement, or if you add a rider specifically for these items, if you schedule them, that's the lingo, schedule them, you'll be able to, you won't have these limits, so they will be paid out in full. So think about anything that's extremely special to you, and make sure that that thing is covered by your insurance. And then we also want to make sure that you create a home inventory. I touched on this as one of our preparedness action steps. It's really important to, take your phone, walk around, take video of your belongings, and then store it in a safe place. And I would really encourage everybody to use the technology that they're comfortable using, because if you need to use your inventory, something horrible happens. And you don't need the added stress of having to try and remember what the cloud is, or where you sent it, or which, where it is. So really, we want you to just use technology that you're comfortable with and save it in a place that you can access to if you need to. So that might mean going around and taking a video with your phone and then emailing that video to your email, and so that it's stored in the cloud. If that works for you, that's the example that that works well. But if you don't know how to access it at a later time, you can take photos and then you can send them to, say, your sister who's out of town. So really just use the technology that is right for you. All right. And now that you know what's in a policy, we want you to do that insurance checkup with your agent. So sit down with your agent. I don't know if anyone's doing sit downs these days. So if it's a phone conversation, the most important thing is to make sure you are taking notes during that time, just so that you're on the same page. Take notes. You can email your insurance agent your notes and just say, oh, did I capture everything right? Is it, thanks for our conversation. Something as simple as that just creates that paper trail that shows that you have communicated your insurance goals to your agent. And what that means is, I want my home to be covered if the worst case scenario happens. I want to make sure I have enough coverage to rebuild after a disaster, after a wildfire. So those are important things. And then also follow up if you have any unanswered questions. Insurance is complicated. It really is. And it's good to go over scenarios and really make sure you understand the product. It's, we spend a lot of money on it, and it's something that very few people really dive in and understand. So that's what your agent is for. We encourage you to have a relationship with them, but also to take notes and keep this paper trail. So questions to ask your insurance agent, will the policy cover the cost of rebuilding? What causes of loss? So that's the perils which we were talking about. What's not covered? Will the insurance cover the cost to meet building code upgrades? Are there limits on repairs? How long will my additional living expenses be covered? What are my current deductibles? All those what ifs. Just ask these questions, and hopefully you'll get the answers you need. And you can always ask those follow-up questions like, oh, is there coverage that fills that gap? Something like that. You know, that's an important piece. It's important to remember too that a lot of insurance agents do not have experience on the claim side. So like, you know, so they may know what the coverage is, but as we were talking earlier about how there are coverage issues and claim issues, they may only understand the coverage issues. So that's just an important distinction, that with insurance companies, there are, you know, multiple different departments. There are the agents that sell insurance, there are the adjusters to adjust claims, and then remember there's the marketing department too, that kind of blankets all of us with this warm feeling of all you have to do is buy insurance and you're covered, when we really know that it's a little more complicated than that. So I want to give a couple examples here. You know, we've been talking a lot about what your policy may or may not have. And one of the things that is really common is having, you know, roof hail damage. So, and how insurance pays out. So again, we're getting a little bit into to the claim side, but it's important to just kind of go over these scenarios so you know, understand how insurance works as well. And this is kind of a lead off into the last piece of the presentation. So just stay with us here. So if you have hail damage on your roof, and it's going to be about $30,000 worth of damage. This is an example. You know, there are different kinds of deductibles. And what that means is that correlates with how much your policy may pay out. So here we have a $1,000 deductible, a $5,000 deductible. And then the example we used is a policy that has $400,000 for your dwelling limit. So we have a 1% and 2% deductible. So knowing what your deductibles are is really important because it has a direct correlation, you know, it's direct connection to what your policy will pay out. And that's a really important thing because some of our advice is, you know, we've been talking a lot about what to add onto your policy and how to make sure there's enough inside. But if all of these things are adding up and you feel like your insurance coverage is getting too expensive, one of our pieces of advice is to raise your deductible. And what we're talking about is raising the dollar amount so that you know the fixed dollar amount, so that you know how you are very clear about how much it will cost if you have damage. So if you feel, and I have a slide on this a few down, but if you want, that is one way that you can reduce your costs is by raising your deductibles. And the question to ask your agent is, how much are my premiums if I raise my fixed deductible from $1,000 to $2,500, or from $2,500 to $5,000? If you can ask that question and see what your annual premiums will cost and how having a different deductible will affect how much you pay. But keep in mind that it has a direct effect on how much your policy might pay out if you have damage. Okay, so another example here takes into account the fine print in your policy. So the first example really just focused on understanding your deductible, but this one focuses on what happens if you have a deductible, but your insurance policy on the inside also has an actual cash value clause for your roof, so it won't pay for the replacement cost coverage. And then you also have and cosmetic only damage exclusion. This is why we really want to look inside, because all these different variables, when you add these pieces of the fine print, it really could reduce your payout to $0. So it's not just about how much coverage you have and how much your deductible it has, but really it takes into account the fine print of how much you will receive for your damage. So buying that policy that does not have these exclusions or these endorsements that reduce your coverage to actual cash value make a big difference, because of whether or not you will even get any money from your insurance policy. Another exclusion in your policy is for flood damage, but flood insurance is available through the National Flood Insurance Program, and it is available through private insurers as well. And we urge everybody to get quotes for flood insurance because it's almost more than 40% of flood claims are outside of high-risk areas. And so what that means is if you are in a high-risk area, your insurance, your mortgage company usually requires you to have flood insurance. But if you're outside that very high-risk area, then you're not required to have it, but it's also not included in your homeowner's insurance policy. So you have that gap there. So there's a new tool too that we found very recently on Realtor.com. They're just rolling it out now, but you can enter in your address, and they have it's called the flood factor, and they will give you a rating from 1, which is extremely low, to 10, which is extremely high risk for flood for your property and its risk of flood. So we encourage you to do a little bit more homework on finding out if you need flood insurance. And just keep in mind that if you do buy it through the National Flood Insurance Program, there is a limit for your structure for $250,000 and a limit for your contents for up to $100,000. And you have to specifically add contents coverage and any building code upgrade coverage, you can add that, but it's included within that $250,000 for your building. Flood insurance through the National Flood Insurance Program also does not have coverage for additional living expense coverage. So if your home is damaged by a flood and you're no longer able to live there, you do not have, most of the time, you do not have coverage through your home or your flood for temporary living expenses. So that's a really important thing to just know, that there's really, there isn't coverage for that. So we just want to make sure that you know that these are really insurance holes that we see after disasters. But having that amount of money to rebuild your home, especially if you do have a high risk or even a moderate risk, it's worth getting a quote. It's worth filling that hole from your homeowner's insurance coverage. And then update your safety net. We really want to make sure that you are reviewing your coverage when your renewal comes in. It might seem a lot to do every year, but it's great to have that conversation. And then also update your insurance when you have changes in your life. So if you do a remodel to your home, it's really important to make sure that if it's more than about $5,000, there's likely a little bit in your policy that says you will report those remodels. So if you do a fairly large remodel, you have to tell your insurance company. If someone new moves into your home, if they're not related to you, or if they're an older child, you want to make sure that their name you can add them onto your insurance policy. And that's a really important thing to do because it just adds, they are also protected by your insurance policy then. If you participate in the share economy in any way, that is an important piece to talk to your insurance agent about. If you get married or separated or divorced, or if you buy a dog, you want to take a look at your insurance policy, hopefully before you get your dog, and make sure that their breed is not specifically excluded in your policy. That's an important one to keep in mind. And then here we go. So tips for reducing the cost. This is, it's not all about adding. We want to make sure that that you can, when you're shopping around, and that includes in the conversations you have with your current agent, ask them for a quote for different levels of deductible. And then also make sure that you check your clue report for errors. So you may have, if you have a certain amount of claims on your clue report, which is like your record, you may be paying more for insurance. So you can get a free copy of your clue report. I have a slide on that in a second, and then updating any errors on there. And then again, you can shop around as long as you're comparing coverage. That's a really important piece there. And then hardening your home. Anytime you have to do any sort of update, making sure that you are using fire resistant materials and impact resistant materials is really important. And then hardening your home. So Wildfire Partners is an important program that is in Boulder County. We encourage you all to look them up, and especially if you're in the forested area. But if you're not, there's also a really great resource for you from the Institute for Business and Home Safety. So Suburban Wildfire Adaptation Roadmaps, and these are two resources that will help you identify what you can do to harden your home, what you can do to make it more resistant to wildfires. And the great thing about Wildfire Partners is that they will do an assessment for you. So you apply to be part of their program, and then they will send someone out and really give you a roadmap on what you can do to make your home more strengthen it so that it's more resistant to fire. And they even have some financial awards available. So really check them out. It's definitely worth it. And then again, there's this wonderful resource for the Institute of Home and Business Safety that is a checklist. We also encourage you to join a fire safe council or a firewise community if you can. Finally, a little bit about your clue report. Again, we have a link here. CLUE stands for Comprehensive Loss Underwriting Exchange. They gather your claims, and this is what insurance companies use to set rates. So different insurance companies have different guidelines on how many claims that they will have. But if you have a $0 claim, or perhaps you called your insurance agent to ask them a question and they took that as filing a claim, you might have something on your record that if you were to clean it up, it could reduce the cost of your coverage. And then for small claims, remember that they can really add up against you. If you have a small amount of damage and no one was injured, and you can cover the cost of it, for instance, if a baseball went through your window, or if you needed, something small like that, just take a moment. We do want you to report claims if you have them, but if it's something that is small, calling your insurance agent immediately could trigger a small dollar or zero loss claim that will have a repercussion of raising your premium, when really your intention may have just been to ask them a question. And then again, in these times, we're all looking for ways to save money, since these are very hard times all around with COVID. So you may be driving less. If you're working from home, contact your insurance company and ask them if they can reduce your annual miles, if that will correlate with an auto discount. You might have received a small refund for COVID from a lot of insurance companies who are doing that. Again, we want you to review your clue report and then also think before you file a small claim. Another resource that's really important that I wanted to make sure that you guys know about is your Colorado Division of Insurance. So DORA is the department that regulates insurance in Colorado. And if you have questions about your insurance, you can always call their hotline. If you have a complaint against the insurance company, if you have a claim and you feel like they're not taking your claim into consideration, there's a delay, they're denying something, make a complaint with the Department of Insurance. It's always important to make sure that they know what's going on, and they have great resources on their website as well. And then again, United Policyholders is here if you do have that claim that you need to help get through. So if you do have a claim, just our Our fast and quick advice is to get a complete copy of your insurance policy, to find out what your loss of use, that's your additional living expense coverage benefits are, and start using them. Start a claim diary, save your receipts, take pictures of the damage, and then also sign up to make sure that you stay in touch with UP, because we are offering lots of insurance claim help webinars during this time. And then we know this isn't a big issue, but if you do get dropped by your insurance company, we have resources for that on our website. And that's it. So thank you so much for spending your hour with me to talk about insurance. I'm going to stay on and answer some of the questions that are in the Q&A. So if you have gotten everything that you have from this webinar and I answered all your questions, please feel free to sign off, and we'll send you a follow-up with the slides. This webinar is being recorded. And then I'm going to talk to answer a few of these questions. So one of the questions was, do the surveys from past fires indicate which insurance companies work claims best? That's a really great question. So one thing that we see is that we see trends. So after some of the recent wildfires in California, some insurance companies were paying out the contents coverage in full without having to do an itemized waiver. So an itemized list. So that's a really, really great thing. But for the most part, your claims experience may have a lot to do with the experience of the adjuster that's assigned to your claim. And so that's a really great question. We do have information though about the financial status of your insurance company, and that's a really important thing to see as well. So thank you all so much, and I really appreciate your time, and have a great evening. I'm